Welcome to the Deep Dive. Today we're going to really dive into the crypto world. It's incredibly dynamic right now, and we'll look at its wider economic impacts too. Our goal here is basically to sift through all the material you've shared and pull out the most important bits, giving you a clear, solid picture of what's happening.
Yeah, and what's really striking, I think, is how connected everything is. You've got market moves, big institutions shifting their positions, and then these global economic factors all playing off each other. It's this complex living thing, really. We're here to help you make sense of it.
Absolutely. And speaking of making sense of things, the latest market numbers are definitely making some noise. Bitcoin, for instance, is hovering around, what, $119,000? So incredibly close to that recent high of 123K.
Right.
But maybe the bigger story isn't just the price itself. It's this pretty remarkable 93-day streak it's had above $100,000. That feels different, doesn't it? Like maybe some newfound stability there, not just pure speculation.
It is fascinating, isn't it? Because, just a few months back, a lot of people thought reaching these levels again seemed, well, pretty far-fetched. But this kind of rapid acceleration, once an asset like this starts moving, it's just classic crypto market behavior. The momentum builds fast.
It sure does. And we're seeing it elsewhere, too. Ethereum's had a huge week, up, what, 21.3%?
Yeah, 21.3%. It's quite the jump.
Hitting $4,248, which puts it only about 15% away from its all-time high. Remember that back in November 2021? $4,878.
It feels like a long time ago now.
Yeah. But then you look at others, right? XRP is at $3.18. BNB's over $800. But some still have a pretty long road ahead. Solana needs like over 60% more. Dogecoin needs a huge 230% jump from where it is now, around 23 cents. And Cardano, that needs a massive 286% from its 39 cents to get back to a $3.09 high. Even Chainlink, LINK, needs about 138%.
So it really makes you think. When you look at coins like Link or Cardano, Doge, they need such big climbs. Some investors see that as, deep value potential, a chance for recovery. But others might look at that lag and think, well, maybe their story just isn't catching on with the wider market right now. Is it just a delayed reaction? Or, has their moment passed for now? It's a tough call.
That is a really key question. Okay, so we've seen these individual gains, impressive ones. But what's behind this bigger trend? I think it comes down to the growing power of crypto, its clout, and how Wall Street is really starting to embrace it more. If you look at market caps, Bitcoin is right on the heels of Amazon's $2.3 trillion. It's even flipped it at times recently. That kind of puts it potentially as the sixth biggest asset globally if you throw gold into the mix. That's a huge shift.
And what's really interesting about that scale comparison, for the true Bitcoin believers, the long-term target is still gold. Gold's market cap is, what, $23.2 trillion? Just colossal. So for Bitcoin to reach that, it needs to grow more than tenfold from here, and maybe even more, right? Because gold's value could keep growing too.
Good point.
So it kind of begs the question, is Bitcoin's current size massive for, say, a tech company? Or is it still actually quite small if you think of it as digital gold? Really depends on how you frame it, doesn't it?
Yeah, that framing is everything. And speaking of size, Ethereum's position is pretty remarkable too. It ranks 24th globally by market cap right now. That puts it ahead of huge names like ExxonMobil, Palantir, Costco, Johnson & Johnson, Home Depot.
Wow.
Even Samsung, which is 35th. Now, it's still behind MasterCard and Visa, sure, but still number 24 globally. But maybe the most interesting part here are the people really pushing the Ethereum story on Wall Street.
The narrative drivers.
Exactly. You've got Tom Lee, right. He's a big voice in traditional finance, and he's actively telling Wall Street, hey, look at Ethereum, especially for institutions that maybe felt they missed the boat on Bitcoin. And you probably remember his past Bitcoin calls. They often took time, but directionally, he's often been pretty accurate long-term.
He has a track record.
Then there's Arthur Hayes, former BitMEX CEO, big figure from the early crypto trading days. He's apparently jumping back into Ethereum now, buying at these higher prices. Clearly believes that institutional story.
Following the money, perhaps?
Seems like it. And finally, Joseph Lubin, co-founder of Ethereum Consensus. He's making bold prediction. He thinks the flippening, ETH overtaking BTC in market cap could actually happen within the next year.
Yeah.
Says it's driven by that strong institutional pull. What do you think? Is that timeline realistic, given Bitcoin's dominance now?
Well, that's the multi-trillion-dollar question, isn't it? To get some context on the flippening, that term really took off around June 2017. Back then, ETH's market share was actually really close to Bitcoin's, like 31.2% for ETH versus 37.8% for BTC.
Wow, that close.
Yeah. Today, it's different. Bitcoin's dominance is around 59%, Ethereum is about 12%, big gap. But if you connect the dots, if Ethereum just got back to its 2021 value relative to Bitcoin, that was about 0.085 BTC per ETH, today it's around 0.036. Well, based on current Bitcoin prices, that alone would put ETH over $10,125.
Okay, significant jump.
Yeah, and some bulls are calling for even higher, like $16,000, maybe even $22,000. So for the flippening to happen in a year, you'd need an absolutely enormous wave of institutional money pouring specifically into Ethereum, probably even faster than it's going into Bitcoin now. It's a very bullish call.
But that institutional interest is not just talk, right? We are seeing it in the data. Those Ethereum ETFs, the inflows are consistently hitting new peaks lately.
Yeah.
That's real Wall Street demand showing up.
Exactly. The money is flowing.
And it's not just ETH. Look at Michael Saylor's MicroStrategy. Still aggressively buying Bitcoin, just raised billions more to do it. And it's broadening out. Big universities are getting involved. Brown University put $13 million in. Harvard's got like $117 million in Bitcoin ETFs.
Wow. Harvard too.
Yeah, apparently one of the largest asset holdings now. And Emory University put $15 million into Bitcoin ETFs. When universities with huge endowments start allocating, that definitely signals a shift.
It really does. Changes the perception.
Okay, so let's switch gears a bit and explore this really interesting debate about Ethereum's future. There are two kind of competing analogies people are using. Let's break these down.
Okay, first up, you've got the HD, DVD versus Blu-ray analogy. Remember that format war back in the 2000s?
Vaguely, yeah. Blu-ray won, right?
Right. And the key point is Blu-ray didn't necessarily win because it was technically way better or cheaper than HD DVD. It won because it got these critical network effects. All the big Hollywood studios started releasing movies only on Blu-ray. Sony put Blu-ray players in every PlayStation 3. Retailers like Blockbuster remember them. And Walmart backed Blu-ray. That huge ecosystem support basically made it the standard.
Okay, I see. So applying that to Ethereum, the argument is, even if maybe Solana or Cardano are faster or cheaper right now, if Wall Street decides to build its main infrastructure on Ethereum, that network effect could make it the winner anyway.
Precisely. It becomes the de facto standard because that's where the big players are building, that's where the liquidity is, that's where things connect. The technical details might become secondary to just being where everyone else is.
Okay, makes sense. But then there's the counter argument. Let's get into that. What if it's more like the Netscape versus Internet Explorer Chrome analogy?
Right. So think back to the early internet. Netscape Navigator was the dominant browser. Like, everyone used it.
Yeah, I remember Netscape.
But eventually, it got completely overtaken. First by Internet Explorer, which Microsoft bundled with Windows, and then later by browsers like Chrome and Safari. Netscape basically vanished. The initial leader didn't stay the leader forever because better, more integrated, or just newer alternatives came along.
So the argument for Ethereum here is, once Wall Street really starts using it heavily, they're going to run into its current issues, right?
Yeah.
Scalability, gas fees. And if those problems aren't fixed super quickly, and ETH devs admit it could take years, maybe those big institutions eventually say, okay, let's just move to one of these newer chains that's already faster and cheaper.
Exactly. So you have this tension, the established network effect pulling one way, and the potential for better, newer technology pulling the other way. It really makes you question, though, why do we always assume it has to be a winner-take-all situation?
Good point.
I mean, look at laptops or running shoes. You have Apple and Dell, Nike and Adidas. Different options coexist, catering to different needs or preferences. The crypto space, just like tech in general, probably isn't a zero-sum game. Maybe we end up with multiple successful smart contract platforms. A multi-chain future seems quite likely, actually.
That's a really important perspective to keep in mind. It's not always one or the other. And that complexity isn't just in crypto itself, it's tied into the whole economic picture, isn't it? So let's talk about that broader landscape for a minute and what it means for you looking at the week ahead. Right now, futures markets are looking okay. Dow, S&P, NASDAQ, all slightly up. NASDAQ actually hit a new peak on Friday. Commodities, oil is around $63, $64. Gold is still high, $451 an ounce, though it cooled off a bit maybe on those U.S. tariff talks.
Right, the import tariff discussion.
Yeah. So looking ahead this week, it's pretty packed. We've got the Reserve Bank of Australia's rate decision. And then crucially for the U.S. market and global markets, really, the CPI inflation data. That's Tuesday morning, East Coast time. Core CPI too. Estimates are for a slight increase, which would continue this sort of 3-month upward trend.
Yeah, inflation's still sticky.
Definitely.
Yeah.
We'll also hear from various regional Fed presidents all week. Their speeches get parsed pretty closely. Thursday brings the latest initial jobless claims numbers, expected to tick up slightly. And we get producer price index, PPI data as well, and kind of a wild card geopolitically. Presidents Trump and Putin are meeting in Alaska on August 15th. Any sign of progress on resolving the Russia-Ukraine conflict there could obviously be a positive signal for markets.
Absolutely. And if we tie these economic indicators back to the Fed, it's interesting. Even with inflation ticking up, there was that significant downward revision to the U.S. job numbers recently. That's making a lot of people think the job market isn't quite as strong as maybe the Fed chair believes.
Right. The narrative is shifting a bit.
Yeah. And that's why you're seeing predictions now for the first Fed rate cut maybe coming in September. JP Morgan's even forecasting 4 cuts this year. That's a full 1% reduction they're predicting.
4 cuts. Why?
It's aggressive. But, you know, the positive spin on this, if there is one, is that with rates currently relatively high, like 4.25% to 4.5%, the Fed does have room to cut. If some kind of black swan event happened, another pandemic or something major, they actually have ammunition to stimulate the economy. They can lower rates significantly if needed.
That's a good point. Having that policy space is valuable. Okay, let's pivot one more time to another big debate within crypto itself. It's about the 4-year cycle. You know, this historical pattern of huge price pumps, the big crashes or crypto winters. A lot of people in traditional finance now, experts you see on CNBC and places like that, they're arguing it's over. They say with all the institutional ETF money, the corporate buying, Bitcoin's basically grown up, moved past those cycles.
But what's so interesting is how much the crypto community itself disagrees with that view. If you look at recent polls, like on Telegram or X Twitter, a clear majority, maybe around 60%, still think history repeats. They believe the 4-year cycle is still in play.
So a real split in opinion.
Yeah, and honestly, that split is probably healthy. If everyone agreed it was definitely over or definitely still happening, that would be more worrying. Universal consensus in markets is often a contrarian signal, right? This disagreement shows the market is still figuring things out.
That's a great way to look at it. And just to reinforce that institutional point again, the Bitcoin ETF inflows also hitting new peaks. There was that brief period of outflows, but the demand from Wall Street seems strong again.
Yeah, the demand is resilient.
Right. And just a couple of other quick news items. Coinbase launched a new DX integration. That's a decentralized exchange. It's on their layer 2 network base. Lets people trade millions of assets directly, peer-to-peer, which wasn't possible on Coinbase before.
Expanding access. Interesting.
Yeah. And Tron Network hit $600 billion in monthly stablecoin volume. Mostly lots of small transactions, apparently, showing broad usage. Also, a leadership change at the White House Crypto Council. The director stepped down, deputy took over.
Always moving pieces in regulation.
Always. Okay, finally, let's talk about a practical strategy. Dollar cost averaging, a DCA. We've been running this live demo account for, 2-3 years now? Just putting $100 in every single week. Half into Bitcoin, half into Ethereum, no matter the price. Rain or shine.
Consistency is key.
Exactly. And this week, we put another $100 into Bitcoin at $119,322, got 0.00083 BTC. And $100 to Ethereum at $4,248, got 0.0234 ETH. And the results. The account is now worth 92,936%.
Wow.
That's an overall profit of 168.6%. If you break it down, Bitcoin's up 228%, Ethereum's up 109%. ETH is catching up a bit there, but yeah, that's $58,000 in profit just from consistently putting in small amounts. It really shows the power of time in the market.
It really does. And what's so powerful about DCA, the principle behind it, is that you naturally buy more shares, or more coins in this case, when the price is low, and fewer when the price is high. So over time, especially in a market that trends upwards long-term, even with volatility, that consistent accumulation during dips leads to really significant gains. It proves that slow and steady often wins the race for long-term investors, rather than trying to time those big, often unsustainable surges. It's about patience.
Well said. Okay, so to wrap up this deep dive, we've covered a lot. The current crypto surge, especially BTC and ETH nearing highs, the massive wave of institutional adoption, Wall Street, universities, everyone piling in. We looked at the economic backdrop, inflation, Fed policy debates, upcoming events, and we explored those key debates. Ethereum's future path and whether those crypto boom-bust cycles are really over.
Lots of moving parts.
Definitely. So the final thought to leave you with is this. We see the market is totally split on whether these 4-year cycles still exist. We see huge institutions diversifying into crypto beyond just Bitcoin now. So how can you potentially use this ongoing institutional wave to your advantage? How do you navigate this debate about predictability versus maybe a new era? And what about that potential multi-chain future? Lots to think about as you shape your own long-term strategy. Thanks for joining us on the Deep Dive.